Hi, Andre.
Hi.
Today, as a going Mount real estate, of course, we want to talk about real estate in our season 2. So in Dubai, actually, because it's a growing economy, in fact, Dubai freehold real estate only started in 2002, meaning it's only 23 years young. It's just a baby. So in Dubai, majority of the residential real estate, actually more than 50%, almost 60%, is in something called off-plan primary, or in Vancouver, we call that pre-sale. In Cantonese, we call it 老花.
In Czech Republic, we call Seprode.
Okay, meaning it's actually not ready. It's only a piece of paper, and you're buying it off the plan, just from the drawing. So it's very interesting, right? Because majority of it is primary. And of course, there's also secondary, meaning already finished or existing property, which I specialize in Vancouver. And I was listing queen.
For 20 years, right?
For 20 years.
Wow.
So we're very familiar with secondary. But in Dubai, the market is very different. And why there's way more return on investment and opportunity in the off-plan. We're going to dive deep into that today in this episode. Okay, so let's go. When we talk about off-plan primary, we can buy from many developers. Dubai actually maybe have over 100 developers. But of course, we want to go with the strongest one, the most reputable ones, which are government-backed developer, such as Emaar, Nakheel, Dubai Properties, Miraz, all the government-backed ones, right? So we love government-backed properties. Why? Because more safety, more security. So therefore, because, when you buy off-plan or pre-sale, meaning actually, in fact, it's just a piece of paper. In Dubai, you get a little bit something better, meaning once you pay the 20% down payment plus the 4% Dubai Land Department registration fee, you get something called 𝐽𝐿. 𝐽𝐿 is like a pre-title deed. So you get a piece of paper with the 𝐽𝐿, you can go and, apply for golden visa, right? So that is one advantage. You don't have to buy something, for the secondary in any market that we know. You have to pay all cash. If you don't have all cash, of course, if you're qualified to get a mortgage, you can get mortgage. Maybe you can get 50% mortgage, maybe 60, 70, or even up to 80% mortgage. But mortgage is not free. Mortgage come with the interest rate. Typically in North America, maybe you start from 3.9, same thing with Dubai, 3.9 up to 6% interest rate.
So can people from Canada apply for mortgage in UAE, Dubai?
Yes, you can. So very similar to any developed countries. When you apply for mortgage, you need to have a proof of income. If you don't have income, meaning maybe you get some passive income, then you have to show your source of income.
So instead of having some money on your account, you need monthly paychecks, right?
Yes,
Right.
that is the best. Bank love to lend money to an income earner with active income. Or if you're an entrepreneur, still bank like to lend money to you because you're earning money. But the banks, the financial institutions sometimes feel if your entrepreneur the risk is a little bit higher. So entrepreneur maybe have to pay 1% or 1.5% more. So if I'm a high income earner, I'm an employee, typically I get a better rate. And if I have a long record with my employer, then I will get a better rate. So definitely you can get a mortgage in the only finished property. You cannot get a mortgage in the off-plan. Right now, there is new thing, if you're a government-backed property, maybe you can get financing from the off-plan. But in fact, banks don't really like to lend money this way. And of course, you need to submit your, financials picture to the bank. Bank doesn't just lend money from equity, based on your equity, right? Bank only lend money based on your active earned income. So very important, if you want to get a mortgage, talk with us. That needs planning, right? You want to make a beautiful profile so you can lend money. You can lend more money so you can leverage the bank's money because relatively speaking, interest rate is still quite affordable.
So if I cannot get a mortgage for off-plan,
You can, but with government-backed developers.
yes, but
it's more
mostly
difficult.
you cannot. So
Yeah.
what is the option? What is the payment plan?
So therefore, we can look for developers. Of course, developer offers 0% interest on payment plan. So this is one beauty of buying in Dubai. In Vancouver, when we buy the pre-sale, usually you only pay 20%, right? So in fact, it creates 20% during construction. So you don't have to pay anything for like 2, 3, 4 years until you get the keys. But at that time, maybe you cannot even get a mortgage because the market fluctuates. In 4 years, the market could change, especially if new political parties come in, or if there's banking policy change, or if there's a change in interest rate. So when you buy the off plan, you want to make sure that you can afford the whole thing rather than depend on the mortgage. So that's why in Dubai, when you buy the off plan, the developer give you a payment plan. Right? So typically a payment plan, if you're lucky, you can get a payment plan that's 40 during construction and 60% at handover. And when it's finished at handover, you can, get the mortgage.
Right?
Exactly. Some payment plan are 50-50, which is still very good. Some of them you can see that in Abu Dhabi, maybe, or depend on the developer. Most of the government project off plan now is 60-40 or 70-30. Some of the very popular project, too high demand, maybe 80-20 or 90-10. So this is kind of the payment schedule, and usually it's spread out between 2 to 4 years. So you can pay 20% per year, and by then you have only 20% to pay, right? If you're paying 20% per year for 4 years, you already pay 80%. Meaning, you pay another 20, halas, you have no more mortgage. Not like a 30-year mortgage. When you pay a mortgage is not free, right? Especially if you have a long mortgage. 30 years meaning you could pay double the purchase price because you're paying the interest to the bank, right?
For 20-30 years.
For 20-30 years.
So how long is the mortgage here?
Same thing, the amortization about 20 years up to 65. If you're over 65, unfortunately, cannot get a mortgage. So therefore, if you're under 65 and you want to get a mortgage, you can definitely talk to us and we can help you with that. So that is the difference between off-plan, primary, and secondary. If you have more questions, please reach out to us, book a free Zoom call. And if you like our content, feel free to like, share, and subscribe. Cheers!